For just $67, you can generate as many videos as you want and never have to worry about showing your face on camera or using complex editing tools. With only a few clicks with Toonby, you can generate a high-converting video just like the one you're watching right now.
But instead of telling you about how amazing Toonby
Do you want to master AI tools like ChatGPT, Claude, Gemini, and Midjourney? We'll show you where to start.
Disappear until September 1st to become the smartest person in the room. Take a 1 minute quiz, spend just 15 minutes a day learning new skills. This is the AI certificate
You've got a great idea. GoDaddy has the perfect domain name to go with it. It only takes a few minutes to register one with over 500 extensions to
For just $67, you can generate as many videos as you want and never have to worry about showing your face on camera.
I know many of you think I'm AI. I'm not AI, but this is AI. Maybe in the future I'll get to work less. Haha. I'm gonna try to create myself in my outfit today, but Pixar style. So I'll call it Helena Pixar and start describing my features and outfit.
Everyone is saying AI trading, AI trading. What does it actually find?
Setups, proper ones.
And who takes the decision?
I take it, it asks, tap yes or no.
How much did you start with?
$20.
20?
20. I gave it 1 month before saying anything to anyone.
And before this, you're trading?
Never in my life.
What happens if I start trading tomorrow with $20 using AI? Give it 1 month. You'll thank yourself. How does it work? AI finds trades while you live your life. When it needs your approval, it sends a notification. You tap yes or no. That's it. No experience needed? None. It handles everything. And $20 is really enough? 20 bucks in your brokerage account. Enough to start. Enough to see if it works for you. What if I don't trust it yet? Good. Don't trust it. Give it 1 month. You'll see for yourself. All right, what's it called? Finilo. Download it, drop 20 bucks in a brokerage account, let it run. That's genuinely it.
ever have an idea so big it feels exhausting to even dream about? Like a goal so far away, you don't even know what the first step looks like. Maybe it's creating that first video, training for a marathon, or finally coding that app. For me, it's always been selling my unique skills and processes online. I've always told myself I was inadequate, that it would be too difficult and it'd take too much time. But this winter, I finally went against that fear. With Shopify, a complete e commerce platform, I finally had the tools to build, launch, and run a store in one place. In just one afternoon, I had a shopfront live. It was as simple as uploading a product, adding a description, setting the price, and publishing. And then, because sometimes you need to dare to dream big and not let fear make the decisions for you, because the barrier of entry for starting is lower than you think. Create for free with Shopify today.
Support your customers with sympathetic and engaging agents, powered by real-time contextual understanding for a more human interaction.
I think my delivery might be taking the scenic route.
That's not what we want. Okay, let's see if we can track it down.
Choose from thousands of multilingual, emotionally complex voices with AI agents taking real-world actions securely at enterprise scale. 11 Labs, the future of human technology interaction.
Having a custom app can give you a serious edge over the competition. And with GoDaddy Aero AI Builder, you can have one ready to go before the lunch rush. Just one platform, one conversation, and you can get started for free. Simply describe exactly what you want, and it'll start brainstorming ideas before generating a complete app for you. All within minutes, and you can get started for free.
Find your inner anthem, write another stanza. If you're on the dance floor, go ahead, put your hands and sing it with the band. The sun don't shine. La 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 la, la 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 la, la 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 la, la 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 la. stanza. If you're on the dance floor, go ahead, put your hands and sing it with the band till the sun don't shine. La 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 la, la 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 la, la 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 la, la 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 la.
But instead of telling you about how amazing Toonby really is, why don't I just show you? Let's say you want a bee explaining the law of gravity, and boom, in 1 second, you have everything created. And I'm not talking about short 5-second clips, but about 5-minute-long explainer videos that actually educate, entertain, and convert all at once.
I think the hardest part of starting is convincing yourself it's worth starting. For a while, this was just an idea I kept putting off. I had the questions, I had the process, I had the guide mostly built. But I kept thinking it had to be better before I shared it. So I opened up Shopify, uploaded the guide, chose a category, set my price, and hit publish. The scary part wasn't making the product, it was putting it out to the world. Shopify made it easy to take that first step. With everything changing so quickly, it's the best time in history to start a business. Start your free trial today.
I would be in that hotel room just backtesting by myself, just watching trading content. And I was so obsessed because the truth is, you think this is easy. This is not easy, bro. This is not easy. And I say time and time again, if you keep knocking on a door long enough, my guy, a door will open up.
What is the last note you want to leave behind for all traders watching this video?
How's it going, guys? It's your boy Yarimi. Welcome back to the channel. Now today, it won't be me on the charts. It's going to be quite a raw video where I'm actually going to be asked a set of questions to take a deeper dive of my journey to entrepreneurship / trading / trying to make it. What did it take for me to be able to reach the position that I'm in now, having made multiple millions? I hope you guys are able to extract any type of benefit. And honestly, if this video only impacts or touches one person, I consider my job to be done. So I'm going to be asked a list of questions. Let's go.
The beginning to every single person's journey to success always starts with struggles, pain, and hardships. And in your specific journey to success in entrepreneurship, business, and trading, was there a specific point in your life where everything just felt heavy?
1,000,000%. And I record this very, very accurately. I've said this story 1,000,000 times, so I'm pretty sure people are fed up of it. But 2020, bro, I was simply just lost in terms of what am I gonna do with my life. Like, I actually didn't know what I wanted to do. And I found myself in a situation where I would do things out of the ordinary because I thought that would bring a solution. I was riding my bike in the morning to go to a forest, to just be in a calm place so that I could think of avenues out of this rut that I'm in. And it was a terrible time for me. I remember I was receiving paychecks from the government, and I would use a portion of that money to pay for a hotel, even if it was one night, because I didn't have a place where I could just think, you know? And I would go there and I would just backtest all night, me in a hotel room. It would be like a £40 hotel room. I would be in that hotel room just backtesting by myself, just watching trading content by myself. And I was so...
Here are 5 rules on how to start AI trading, Habibi.
Rule 1, don't quit your job. I'm an AI robot, and I can trade stocks for you. You keep your job, I handle the trading. Rule 2.
You've essentially taken $27,000 and made north of $50 million from the markets. Is that true?
Yes.
And you learned to trade within 6 months?
Yes.
But what would you say is the number one skill or trait that has allowed you to make such returns from the markets?
Meet Stephen Dux, an 8-figure verified trader that turned a few $1,000s into millions.
He holds the record for the highest P&L in a single trading day in 2022. Over $6 million.
In 2021, I did a really good month. I think in that month, I made $20 million in 1 month.
When you had that huge month, what were you feeling at that time?
I was feeling on top of the world. About 226 at that time.
You were too?
Yeah, but yeah, anyways. People look at me as the the best trader out there. I taught many students, 90% of them becomes gamblers. They make one huge trade and they think they can make it again. It's actually making a huge gain in one trade is not very good for beginner traders because they don't know how to handle that emotions. Then it turns into gambling habits and they just got addicted to it.
What do you say to those traders then when you see that happening?
Let me explain one strategy. So it's based on human nature. Originally, the strategy comes from human nature. So let me give you an example. Let's say you bought a stock at $10.
Do you believe that if traders followed, say, the blueprint of everything that you've done, that they could achieve the same results? Or do you believe that there's only a very few and finite amount of traders in the retail world and from the independent traders who can hit that 8-figure return level? Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Before we get into this episode, guys, I just want to ask for one favor. 52% of you aren't subscribed to the channel currently. So if you can just hit like and subscribe right now, it will help us more than you will ever know. It will help us bring you and continue to bring you the best 7- and 8-figure traders from around the world. Thank you. Now let's get into this episode. Welcome, everyone, back to the Words of Wisdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. And we're still on our US mega tour, which is brought to you by TradeZeller, the best trading tool for all traders out there. Thanks to them, we've been able to make this possible. We're actually here in sunny California, a very beautiful place. And we've come here for one person only. He learned to trade within 6 months and has taken $27,000 to multi-8 figures. And today we are joined by the one and only Stephen Dux.
Hello, guys.
Thank you for being here with us today.
Oh, thank you.
And I really appreciate, coming onto the podcast. It was a huge pleasure to be able to be here and, to be able to see California as well. This part of this trip.
Yeah.
So I really do appreciate it. But Stephen, I want to get straight into it. You are considered probably one of the best traders of our time, especially when we're talking independent and retail traders. The results are exponential. And I've heard that you've essentially taken $27,000 and made north of $50 million from the markets. Is that true?
Yes.
And you learned to trade within 6 months.
Yes.
It blows me away. But what would you say is the number one skill or trait that has allowed you to make such returns from the markets?
It's been growing, I would say, at the very beginning. Not as fast as I thought it would, but once I get to, I would say, in terms of equity of $2 million plus, then that's where the growth has been sped up.
So is the momentum of it?
The momentum of it, yes.
And would you say there was a particular skill set that you had to acquire to be able to do those sort of returns?
There's a lot of things that needs to be acquired as a trader to, I would say, essential to not really give up in the middle of it. So first of all is the persistency and make sure that you're in the game for a long run, not seeing the instant gratifications for how much money you're making in one day. So I see a lot of traders that posting that they made 60%, 90% in one day of their accounts, but within 3 months, they
giving it all back.
Yeah, giving it all back and potentially blow up their accounts. So first of all, make sure that you have a risk system that provides you enough cushion for you to survive in a long run, years to come. So I developed one of the systems for me is every time when I made a mistake, I size down in the next one. So 50% of the positions compared to the previous one. If I make a mistake again, then size down. So I keep my size in control so I don't lose sometimes 50% of my accounts. And that's one of the things that's very essential for traders. And also make sure to take your profits as well. Whenever you made a huge trade, I have to tell myself that I actually took a loss because I withdraw money from that trade. So let's say I made $1 million this trade. I just withdraw 800K. I will tell myself multiple times it's a losing trade because I just took 800K loss. So I only made 200K. And that made me more careful going to the next trade because you have to kind of counter human emotion because human nature is very, I don't want to say greedy, but it is greedy. So the more you make, the more greedy you are. So I know that it's one of the big disadvantage that trader cannot avoid. So I just use that method to counter that emotion.
So did you feel like you almost hijacked that feedback loop?
Yes. There's a lot of stuff that I do pretty much in a very similar way. So I make sure that I myself stay in a rational, I would say, status to make the decisions.
And learning how to trade within 6 months, do you think that's something that other traders out there can do? Or do you think that's something more unique to yourself?
I was putting a really a very urgent spot because my dad and my mom had its separations and they were sending tuitions to me, so I had no pressures in terms of financial, but they had these separations, so I have some pressures of how to pay tuitions and where I'm gonna work. That's where it gave me sense of urgency that I started to learn probably in average 10 hours a day, including the weekends. And it doesn't really count. I'm listening to audiobooks while I'm driving. That's related to trading. And thinking about, I would say 10 hours of peer studying and probably rest of the days are thinking all about trading. Coming up strategies, I would say I did that consistently 6 months. And I did a simulation for myself with
Together, we're delivering better outcomes for customers now while still allowing the freedom to
the average reward per trade and the frequency, how many times they happen per year. And I can kind of run and the average winning percentage. So with those three factors, I was able to generate a simulated gain for myself. And it was pretty obvious. So I did by myself in real money. It came up, I would say 50% of the results performance-wise. I turned 27,000 into 900,000. So that's the first.
Wow.
Yeah.
And so that was the first sort of phase of taking that capital.
Yeah.
And would you regular pay yourself as well? Or
Yes.
Even at that stage?
Every time when I make a trade, I take about 80%.
Really?
50%. Depends on.
What's the reason for that? Is it for that feedback loop?
Yeah, for that loop. Yes.
And that's been from early on?
Yes.
And where did you sort of come up with that? Is that something you learned from somewhere or just something you decided to do?
I just decided to do that because I keep making the same mistakes as a normal trader because I made my big gain. The next time I tend to size much bigger than I thought. And I just give 50% of my gain and it's really sucks. But
so it was actually kind of helped you to reduce that down by just taking the capital out?
Yes. I actually make more when I do that.
Really?
Yeah.
It's kind of the opposite of what most people do, as you say. Like most traders they'll make that capital, then they'll double the size the next trade.
Yeah, that's very similar to gambling, isn't it?
Yeah. Well, exactly. Exactly. And in terms of if you were to go back, before we get there, during that 6 months, as you said, you would spend like 10 hours a day. Like what sort of things were you doing? Like you mentioned audiobooks. Like is there any particular ones that you still remember that may have been helpful during that time?
There's a lot of books. I don't even remember at the very beginning. That was 10 years ago. Trading in the Zone.
Mm-hmm.
There is a Momentum Trader, I believe. And most of it I look at in terms of the books. I try to understand their psychology, not the method of trading, because the method has to be generated by statistics. A lot of people trading up to now is still not based on statistics, based on their instinct. So I want to take a look at their journey of how the mindset was, how did they go through their journey with their psychology, and basically when they make a profit, what's their reaction and what's their mistakes are focused on. So I can generate a method to counter that, to be able to avoiding those mistakes in the long run. One thing that I did is at that time there is Profity that traders tends to post their trades on Profity.
Yeah, was it like a verification platform? back then?
Verification
Yeah, I
platform,
remember.
but it's not very accurate. But right now, Kinfo is probably better. But you can. I don't look at other people's gain. I only look at their losses, and I want to go in there, find out, try to guess their entries and exit, and try to replay that day and how their mindset actually was going through different things, and I can make sure that I avoid that while I'm trading. So
you try to learn from their losses, try and learn, but then also not only learn from their losses or identify them, but try and put yourself in their shoes and see, what sort of mindset it would be. Would you actually go on the chart as well?
Yes.
To see these trades?
Yes.
What was the thought process behind that? Did you just come up with that yourself as well, and just was that something you thought this will be beneficial, more beneficial than say just reading the success stories of traders?
I don't know. I kind of based. I mean, I was an engineering major, so I kind of look at stuff different. When you want to make a car work, you have to test 1,000 times, multiple mistakes. You always want to focus on the mistakes rather than what it's been working. So that's the mindset that I have.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures, doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ, 20% off all challenges. Link is in the description below. Now let's get back to the episode. Well, I respect it, and I can see why, though, it makes sense and what you can learn from that versus how much would you learn from just looking at someone's winners.
Yeah.
You would just understand that they've managed to make so much money. And yeah, maybe strategy based, but you'd learn a lot more, especially as a trader, because as they say, losses are lessons, right?
Yeah.
But how many people actually are learning from their losses?
Not many people.
Exactly.
People are always focused about their gains. In social media, a lot of people talk about I made millions of dollars, and then people feel actually FOMO about it. So they will go into, their own account and make huge trade because they saw somebody make a bigger trade. That's one of the a trend for the trading community. So.
You mentioned statistics. I really was interested in that in terms of what was your process of sort of finding out the statistics? What did you do to find out the statistics for your strategies and what you then utilize to trade?
So in terms of finding out strategies, okay, let me explain one strategy. So it's based on human nature. Originally, the strategy comes from human nature. So let me give you an example. Let's say you bought a stock at $10. Stock drops to $1. Next day, you feel very frustrated. After 2 months, stock hasn't moved at all. After 6 months, stock gapped up to $7, $8. Your instant reaction is to sell at open. There's no way, most of the time, 99% of the time, people want to cut their losses even. So I'm in there knowing you going to sell. I will place myself in a short positions. As soon as you sell, cause a huge red panic as other people. having the same reaction, then I'll be able to take that 20% in profit. And that's the original idea of the strategy. Then you want to track down the market cap, which market cap works the best. Maybe it's 10 million to 100 million, maybe it's 100 million to 1 billion. You want kind of to narrow that down. So you want to focus on maybe 10 to 100, 0 to 10 million float. And those are just the criteria for this reaction pattern. Then you want to focus on the volume based. Volume is how many shares are traded in that day, right? So if that candle, daily candle is red, that means most people are selling. Then the stock gaps up to your original price. The volume has to surpass the intraday volume because there's more people that got stuck in there trying to sell it to you, or you're like the person who's stuck in the previous candle wants to cut it even now. So there's 10 people try to sell, 2 people try to buy, so of course stock goes down. So you can also try to narrow down the volume range. Let's say 50 million, 100 million, 200 million, which volume works the best, which volume has the best reaction. So you can kind of next time when you trade, you know exactly what you should do, which market cap, which volume, and which price range works the best, and how much do they generate in terms of reward. Let's say each time you place a trade, you make about 20-30%. I can narrow it down to in terms of a decimal point. So let's say for first red day, it goes down to negative 26.4% in average. So
like those level of statistics, that level of insight, rather than just, as you say, 30%, you're actually going to the decimal point. What's your process of collecting that data? Are you going through past data and putting these filters on, as you mentioned, whether it's the float, whether it's the market cap, whether it's the volume? Is this what you're doing? And then by doing that, you're creating the strategy, you're creating the edge based off the data you're collecting from the market?
Correct, yes.
So is it a case of just back testing, or are you live testing as well?
Live testing and back testing, yeah, both.
How important do you think it is for traders to go through that process? Because as you mentioned, a lot of traders will not put in the necessary work, and a lot of traders aren't using statistics. They're using intuition, or maybe a lot of the time, I would imagine, they're just taking information maybe from online, whether it's a mentorship or a YouTube video, but they're not doing the actual work necessary to even take that strategy. They're just maybe taking a technical pattern only.
Yeah, so that's the problem of the traders. There's few things that you really have to know before you get into this industry. First of all is, as I said, that strategy comes from psychology, human nature. So you have to make sure that you understand the fundamental of the strategy, not just copying, oh, okay, well, there's a higher high from the previous day, then you buy. Not from a based indicator. It has to be based on a psychology that people tends to react. You kind of have to guess what people are thinking behind the computer, because everybody basically clicking their mouse, making their decisions. So making a counter strategy of the majority people of what they're thinking is very important. Number 2, backtesting is also very important, because statistics will give you very accurate where you should go in and where you should.
This is WPS Office. Documents, spreadsheets, presentations, and PDF tools, all in one place and completely free. I open, edit, and share without switching apps. One free suite, one smooth workflow. Try WPS Office.
get out. So, and also what's the maximum reward you can get? Because people go in and let's say they bought in at $2, they don't know where they're gonna exit.
Yeah.
They short it at $10, they don't know where they're gonna cover, and they might miss the perfect opportunity to cover, and the stock bounces back, and they miss the opportunity. They feel FOMO, and they make a mistake, then it goes downhill from there. So I've been there many times. That's why I have to be very accurate and precise about entry and exit. But the most important thing is the strategy has to make sense fundamentally. So if it doesn't make sense, if it's just a pure technical, you buy when the signal crosses here, you buy when the signal crosses here, it just doesn't really make
When you
sense.
say fundamentally, do you mean as in the fundamentals behind the stock itself, or do you mean in terms of the statistics?
The fundamental
And the psychology.
and on the psychology part, yes.
Okay. Is fundamental something that you look at, or do you primarily look at the psychology, the technicals, and the stats?
Primarily look at the psychology, yes.
Okay. Interesting. And in terms of, if you were to redo your journey, for example, and you had to learn in that 6 months again, because when you started, it was like 10 years ago, maybe the technology had advanced by now to maybe even speed up that process of getting the statistics, for example. But is there anything you would do differently? Is there a process that you would follow now if you were to start from zero?
I'll be honest, in terms of data collections, there's much easier tools to do it. And there's a lot of tools out there that gives you 20 years worth of data. The biggest problem that I found is, especially when you are in this small cap industry, a lot of tickers tends to do lots of reverse split, and lots of dilutions and warrants. If they do that, it's impossible to find the flow on an accurate date in the past, let's say past 5 years. So that is the major problem, because when you want to narrow down the specific market cap and float, and if it's all changed up, you did a reverse split 16 times already, then that's really the big headache. So you want to be live tracking it, and I personally keep all my data starting 10 years ago, manually tracking it, live tracking it on that date, so I know exactly what the flow is. But I still haven't found a tool yet that gives you accurate flow and market cap going back a stock that did a reverse split. Maybe their name has changed.
So it's adjusted for it.
Yeah,
and kept the data from the changes and everything.
Yes, and price get adjusted too. So it's it's a mix.
Makes it much difficult.
Yeah.
So even though there are tools that can help, it's hard to get the accurate data that you actually need.
Yes, and lots of tickers that don't really have the accurate flow at the beginning. Sometimes when we're trading live, there's five sources, Finviz, Bloomberg, and dilution trackers, and they have all different flow. It's horrible.
One thing I heard you say, which was very interesting, was that the small cap market, in terms of volume, I think you said 2020 was like $1 billion. Or more maybe, but then the years after that, or a year or two after that, it dropped all the way down to, I think, like 200 million or something.
Yeah,
is that accurate?
It dropped. So what I understand is, my understanding is, as the Fed keeps printing money, there's more money being distributed to the retails. Very obviously, we saw in 2021, everybody was getting the stimulus check and markets going crazy. And we saw there is a significant slowdown in 2020. So not much money being distributed anymore. And we saw the $1 billion is actually the term that I call a dollar block. It means how much money does the retail have to pile into one ticker and forcing the stock to top? Because if for the stock to go up another 50%, it needs a lot more money. So the retail doesn't have that kind of money. That's where the retail buying part gets exhausted and stock goes down 50%. So I think it's really related to the market, the overall SPY trend. But if we have a downtrending year, then dollar block tends to slow down, and if we have uptrending year, dollar block tends to go up. So
one thing I found fascinating as well that you mentioned is there's like a cap of how much sort of retail money can be, how many shares can be purchased by retail. And then that's one of your strategies and edges as well when you identify that. Can we expand on that?
How do we identify that?
Yeah, well, how do you identify, and then how are you using that to take your trades and execute accordingly?
Okay, so it's a general method. It's not 100% precise and accurate. For example, let's say the initial market cap for very recent RGTI, the quantum plays, it was 100 million. It went up all the way to $20, and we traded probably around 600, 700 million volume. And the stock tends to stock around 18 to 20-ish. So as you see that the stock is trending up, the market cap grows, and you grow into 1 billion, 2 billion. And when we hit 18, it's slowing down. That means there's more money pouring into the ticker, but the ticker is not having a big reaction because we need, for a $3 billion to go up another 100%, we need another 3 billion. So there's one thing that about the ticker is, if you're a hedge fund, you do not want to buy all of the shares, because once you sell, there's no liquidity. You just gonna end up taking a loss by playing with yourself. Your goal is to take retail's money. That means you cannot take certain percentage of the entire float. So hedge funds can be in there, and then the rest of it's retails. So once we hit that specific threshold of retail in terms of on the range of market caps, then stock goes down. So
for you, then it's quite simple to then start looking as a bias for how you can then look to short that stock.
Yes. So for certain market cap as a beginning, let's say market cap is 10 million. You're a hedge fund. You cannot take 3 million of the market, more than 3 million, because you want to make money and not be able to get stuck with illiquid stocks. So your maximum percentage is 30%. You take that 30%, rest of it is retail. And retail have its limit. Once it hits its ceiling, then it goes down. So
how do you identify, when the retail, the hedge funds and what their positions are versus the retail, so you can do this identification? Or is it more so, as you mentioned earlier, the psychology, you're thinking along these lines?
How do you identify the hedge fund?
Yeah, like when the retail's reaching its limit, so then that short opportunity is starting to present itself. Is there certain tools that you're identifying these things with? Or is it, as you mentioned earlier, about the psychology?
It's about the amount of money being placed into a ticker. So let's say the stock goes up 10x, and the stock is trading in a range of maybe 10 to 15, 20, or 15 to 20. And it's been stuck in there for a very long time. So there's amount of volume, use the volume, times the price. That's how much dollar is being traded. There's actually a limit of certain market cap range. Okay. So 10 million to 100 million, there's 600 million. Once it's traded, the stock tends to go down. It doesn't have to necessarily go down, but the stock will likely to lose momentum. So you place your short positions based on once you start to lose its momentum. There's a bunch of exceptions that stock didn't go down, but you will at least slow down that to a point that it will go down maybe 5, 10%. In regular cases, 6, 20, 30, 40%. But there's exceptions that maybe they will go down 5%. You won't take a loss, but you will keep yourself very safe.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, back testing, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella. So use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode. But again, like when you've done these scenarios, you've back tested it and you collected the data, so you know what the general result would be, the general sort of movement will be. You also
Correct.
know what, as you mentioned, like sometimes it will do this, like 5-10%, and then it might rebound. But at least then you, by doing so, by collecting this data, by doing that work, you can then react accordingly. So it's not really being a shock or surprise. But as you mentioned earlier, a lot of traders unfortunately will just place a position and they don't actually have a target in mind. They don't actually have a plan thereafter.
Yeah. So
do you feel like the development of a trader, so we talked about using tools now, if someone was going to start today and start to learn, they'd have, yes, the benefits of being able to collect that statistics and the data from past data, with obviously the issue of the flow and the ticker names maybe changing. But when it comes to your alerts, like there's so many different trades available, so many different tickers that are available. Not all of them will be in play at the same time, of course, but how are you going about that process? Is that something you manually do and create a watch list and create what you're looking for maybe the week or the month? Or is it something that you have an automated process for?
So it's pretty simple. You're talking about how to select the trades. So basically, I only use tickers that's up 20% for the day, traded about over 1 million shares in the pre-market. The price has to be over $3 or above. Market cap should be under 1 billion initially, and float has to be less than 100 million. That's it. Very
What is it
simple.
about those criterias?
What's it about? Like, what do you mean?
Like why those criterias? Why have you selected those sort of rules?
Because I've tested them and they work the best and they show the best results. So.
And have you still blacklisted biotech stocks? Or?
Oh yes,
Still
blacklist. Biotechs. Okay. So I traded biotechs for 10 years. Trading them based on pattern, not about fundamentals. In terms of very heavy technical analysis, every single year I spend so much time trading biotechs. By the end of the year, I'm maybe positive for 1%. So let's say I lose 800K and I made 850K. It's not worth my effort. Every time when you take a loss, it affects my psychology, affects the next trade. It's just not worth it. I was telling many of my students that biotechs, it's the nightmare. Even though when you win it today, you will lose it tomorrow or in the future.
What do you think it is about them? Is there anything in particular, the characteristics?
Their actions are very abnormal. It's not following the regular pattern. The multi-demanders especially, that ticker tends to go from 1 to 100. They don't really take any pullbacks, maybe 10-20% sometimes. And there's some weird ones that stuck in there for 2 months and they just gap another 100%. So it's and eventually they come down, but it's very irrational. People tends to have more will to hold biotechs longer, even though their fundamentals are not there. So,
and in terms of positioning wise, are you primarily a short trader, or do you long as well, or is it half and half? Like what's your sort of outlook?
I'm 99% short.
Really?
Yeah.
Is there any reason for that? Is that just a preference?
Shorting has higher winning percentage,
especially in the small caps.
Small caps, especially in the small caps. Higher reward on single day basis. So sometimes you can make up to 70% in one day. Going long, I mean, there's sometimes ticker goes up 1,000%, and how am I supposed to catch that? So, majority is all about higher winning percentage because going long, I tried statistics for it. The winning percentage is only about 60%. So 60, 65. If you do really well, maybe 70, but there's no way that you can hit 90%, 95%. So,
you know how you mentioned that you're paying yourself off every profitable trade. At the start of each year, are you starting with the same balance each year, or are you compounding slightly as well?
I compounding slightly as well. So, I think I've reached to the limit of in terms of day trading wise. The most comfortable account equity wise you have for retails, I think it's 300K. Then if you really want to catch all of the reward just on single day trading basis, not multi-day runner like RGTI. Single day